This episode is about the mortgage rate drop everyone's been waiting for, and why the day it finally happens might not feel like the win you think it will. We talk to people like this every week, so we know exactly how the story goes.
We meet people every day, say for instance like Jake, a client of mine that I pre-approved months ago. He refreshes rate charts every morning like it's a lottery number, waiting for the headline that says rates are falling so we can finally move. Here's what almost nobody tells Jake before he makes that bet.
Jake, he thinks he's being patient. He thinks he's being smart. He pictures the day rates finally drop as a clean win. No strings attached, nothing but good news landing in his inbox. That picture in his head is missing something important.
We're watching that setup build right now. The Middle East, a stock market priced for perfection that isn't guaranteed to arrive. Every thread leads back to the same lever. And if that lever gets pulled, people like Jake, they finally get their number. But that number doesn't arrive on its own. Something has to give first.
That rate cut you're waiting for, it's a receipt for something breaking first. Sit with that for a second, because it changes everything about how you should be thinking about what's happening in our market right now.
Yeah, stay with us because we need to answer the question that actually matters here. If the relief you've been counting on only shows up once, your own financial ground gets shakier as well. So are you actually still winning by waiting?
We're breaking down exactly what this means for your wallet, what already is moving behind the scenes, and what you actually can do about it right now. All right, so Jake's been pre-approved for 4 months. He checks rates every single morning before he even gets out of bed. His plan is simple. Wait for the rate to drop, then buy. That's not a bad plan on paper. It's the plan that half of America thinks they're running right now.
Yeah, and here's what Jake isn't accounting for. A rate drop does not mean the world got safer. It drops because something broke badly enough that the Fed had to respond. We've been watching the Middle East situation escalate for weeks now, and we've been watching stock trades at valuations that even make bullish analysts nervous. And first-time buyers like Jake, they aren't just fighting rates right now. They've fallen to roughly 1 in 4 home sales nationally. That's the smallest share on record. That's the pool Jake is trying to stay inside of. Every single thread we just named leads back to the same lever. If that lever gets pulled, Jake gets his rate. He doesn't just get it for the reason he thinks he does, though. Something could be breaking and he has no clue.
So the plan, it isn't wrong. The story behind the plan is incomplete. Jake pictures a headline that says rates are falling. He celebrates and he locks in at a lower payment. He doesn't picture what usually has to happen first for that headline to exist. We hear the exact plan from buyers in Wisconsin every single week, and we hear the version of this from buyers in Kauai too. Nobody's plan is foolish. It's just missing the other half of the story. And that missing half is the entire reason we're sitting here today.
Yeah, and that's the part nobody's saying out loud to him. We're not talking about small corrections here. We're talking about the kind of economic stress that shows up in job numbers and retirement accounts, and whether Jake still has the income he's counting on when the rates finally move. So here's the real question we need to sit with. If the rate relief Jake's been waiting for only shows up when something in his own financial life gets shakier, is he actually still winning by waiting? And that's not a rhetorical question.
Guys, you're just talking. Talking la 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 like this is business as usual. It's not.
So let's put real numbers on the table instead of feelings. The 10-year Treasury yield just moved up 5 basis points. That matters because mortgage rates take their cue from that number, not from the Fed directly. When the 10-year climbs even a little, mortgage-backed securities get repriced almost immediately. We saw the same signal in the coupon market this week, where pricing on the 5.5 coupon slipped 2 basis points. That's not noise. That is a bond market telling us the path to lower rates is not a straight line down.
Here's what this actually means for Jake sitting at the kitchen table. He sees oil tankers in the news and thinks that geopolitical story has nothing to do with him. But it has everything to do with him. Since this Middle East conflict escalated, the 10-year has swung through a wide range. And gas prices, they've climbed more than 20 cents a gallon in a matter of weeks. Oil spikes pushed inflation expectations up. Inflation's expectations pushed bond yields up. Bond yields, they're the steering wheel for his mortgage payment, whether he ever reads a single headline about the Middle East or not.
That's right. And now let's layer in the stock market piece, because this is where it gets personal for Jake in a completely different way. Right now, the S&P's forward price to earnings ratio sits around 20 times earnings above its own 10-year average 19 times. That gap is exactly the kind of stretched pricing that historically comes apart hard and not gently. If that unwinds, that's exactly the kind of shock that forces the Fed's hand on the interest rates. So Jake would finally get the numbers he's been waiting for. He would also likely be getting it while watching his own retirement account drop, while hearing about layoffs at companies near his industry, while also feeling less secure in the job that qualified him in the first place for the loan. We are not describing hypothetical here. We are describing the only realistic path to the relief that Jake is expecting.
So the response can't be sit still and hope for the best version of it to play out. It also can't be panic and freeze the moment the headlines sound scary. Both of those reactions leave Jake exactly where he started, stuck with no plan and no protection either way.
That's right. He's basing it off of fear, not facts. And here's exactly what the response actually is. It's a specific move Jake can make this week before any of this resolves one way or another that protects him no matter which version of this story plays out.
All right, we have a plan. 6 stones, 3 teams, 1 shot.
So here's the move, and it's simpler than anyone waiting on the sidelines wants it to be. Get pre-approved against today's rate, not the rate you're hoping shows up in 3 months. The number that tells you what the truth is about what you can actually afford right now with no guessing involved. It takes one conversation, and most people put it off for months out of fear of what the number will actually say.
Yeah, and this is the part where we need to kill the myth because it's costing people real money. Buying at 6.5% today does not lock you into a 6.5% forever. A 30-year fixed is not a life sentence. If rates generally drop the way Jake's hoping for, he refinances into a lower rate and keeps every bit of equity he built while he was waiting for nothing. That is a completely different move than chasing a teaser rate or an adjustable product just to get a lower payment today. We're talking about a smart refinance into another 30-year fixed later on Jake's terms, once the rate actually exists, instead of staying in a world of hope that may never come.
Meanwhile, the version of Jake who waited gets nothing guaranteed. He doesn't get the lower rate for free. And home prices are up roughly 50% since 2020, while incomes, they've only climbed around 30% in that same time stretch. Every month Jake waits, that gap has more time to widen, not less. We see that exact regret from buyers all the time, and it's never once been that the buyer who moved regrets it.
That's right. So here's the real play here. Lock in your numbers today with a rate lock and ask your lender about a float down option in case rates do move before closing, and stop treating the wait as a free option because it never was free. The cost of waiting was never zero. It was just invisible until right now.
That's the answer to the question we opened with. Rate relief and economic pain are not two separate stories. They're the same event, and now you know it.
Right. Let's do the math.
All right, Anthony, let's hit the numbers for the week. Plain and simple, no mortgage speak. The kind of breakdown we give a friend at the kitchen table. We'll give you the actual info that makes up and affects interest rates.
Yeah, let's start with the 30-year fixed. It's sitting at 6.5% today. The 10-year Treasury yield is at 4.59%, up 5 basis points from where it was. When that number climbs, it usually means lenders are pricing in more risk, more volatility, more inflation ahead of mortgage rates, and they tend to follow up, not down. Behind the scenes, the bonds, they actually fund most of the mortgages. The 5.5 coupon is trading at 99.65, down 2 basis points. In plain English, that means the market paid slightly less for that mortgage bond this week, which is another way of saying pricing got a little less friendly for borrowers, not more.
Bottom line, nothing broke this week, but nothing got easier either. That's exactly the kind of week where waiting doesn't quietly help you, no matter what your gut is telling you.
God tells me I should do this. Your gut? Yes.
So here's the answer to the question we opened with today. The rate cut you've been waiting for isn't a reward. It's a receipt for something breaking somewhere else in the economy first. Jake doesn't have to pick between buying scared or waiting blind. He gets pre-approved at today's numbers. He protects himself with a rate lock. He leaves the door open to a refinance the smart way later, on his terms. Once that lower rate is actually real instead of hope on a chart. Waiting was never the safe option. It just felt like one.
So the one takeaway with this episode is really simple. Waiting will cost you, and you're not going to benefit by hoping that the change is going to be on your side. We are Anthony and Manley, and this is the Mortgage 101 podcast. If you know someone sitting on the sidelines right now, waiting for the perfect headline to show up to save them, send them this episode. Not because we're trying to sell them anything, but because the wait they're banking on is never free, and somebody should tell them before it actually costs them. We'll see you next week.
Girl from the heart of Wisconsin to the waves of Hawaii. Manley and Anthony keep it real, not salesy. Breaking down rates and the truth you need to know with a little soul and a little homegrown flow. It's the Mortgage 101 podcast where real talk meets home at last. Manley's got that Midwest soul. Anthony brings that island roll when the market swings and you don't go fast.